May 14, 2026, Bitcoin's at 82,000 and the Clarity Act just cleared committee. Let's go. Quick shout out to today's sponsor, Compete Token, the gaming crypto that actually has real games. Link in the description. Bitcoin just blew through $82,000 and Coinbase stock ripped right alongside it. The Senate Banking Committee just advanced the Clarity Act, the bill that finally makes most crypto activity in this country legal. It's about time someone in Washington figured out what a token is. Two Democrats, Gallego from Arizona and Alsobrooks from Maryland, broke ranks and voted yes. Elizabeth Warren is still mad about it, which honestly is how you know it's the right call. Now it heads to the Senate floor for the final vote. Kraken is officially yeeting LayerZero and moving its entire wrapped Bitcoin product over to Chainlink. The KBTC token has a market cap of $266 million, and every future wrapped Kraken asset is going Chainlink too. This isn't a small thing. The cause: LayerZero's tech got exploited by North Korea's Lazarus Group for $292 million on the Kelp DAO hack last month. Kelp moved to Chainlink, Solve Protocol moved $700 million in Bitcoin assets to Chainlink, and now Kraken's out the door too. This isn't a trend, it's an exodus. Tether, Tron, and TRM Labs run a joint financial crime unit. It's frozen over $450 million in dirty crypto in under 2 years. Drug traffickers, terrorist financing, North Korean hackers, kidnappers, all getting their wallets locked. They intercepted 44% more illicit funds last year than the year before. Remember when legacy media said crypto was just for criminals? Turns out crypto is way better at catching criminals than your bank ever was. BlackRock and Janus Henderson just plugged their tokenized funds into a brand new $1 billion facility that lets investors redeem instantly. Read that again. BlackRock, tokenized funds, instant redemption. The world's biggest asset manager is building on the rails the maxis told you would never matter. This is the part where the people who spent years saying blockchain not Bitcoin finally get to be smug. Except plot twist, they're settling on the same chains you buy meme coins on. The future is here and it's wearing a suit. CME Group is going deeper into the $85 trillion digital assets market with new Nasdaq Crypto Index futures. 85 trillion with a T. The same exchange that used to sneer at Bitcoin is now racing to package it for every hedge fund on earth. This is what the cycle looks like. First they ignore you, then they laugh at you, then they list futures on you. We're past the laughing part. The institutional money is here, and it's not going home. A New York federal judge ruled that $71 million in Ether on Arbitrum can go to Aave as part of the Kelp DAO recovery, but terrorism victims with $877 million in judgments against North Korea now want those funds for themselves. The argument is wild. Lazarus stole the crypto, so the funds are North Korean state property and should pay terrorism settlements. The lawyers say no chance. Stolen property doesn't change owners just because the thief works for Kim Jong-un. This case is going to shape DeFi recovery law for the next decade. Bitcoin buyer Strive just unveiled the first US-listed security that pays cash dividends every single business day. Starting June 16th, their preferred stock pays out daily at an effective yield of 13.88%. That's not a yield farm, that's the Nasdaq. Even better, Strive said they wiped out all their long-term debt by buying back the notes. The stock popped over 5% on the news. Meanwhile, traditional finance is over here still mailing out quarterly dividends like it's 1995. Q1 was brutal for crypto treasury companies. Nakamoto posted a $239 million loss and is now down 99.5% from its high. Bullish lost $605 million and missed earnings on top of that. The lesson is simple. Leveraged Bitcoin treasury plays are not the same thing as just buying Bitcoin. If you wanted Bitcoin exposure, you should have bought Bitcoin. The stock wrappers are just adding dilution and corporate drama. Stablecoin-powered neobank Faucet just raised $51 million to expand across emerging markets. While Wall Street nerds debate regulation, places like Indonesia, Pakistan, and Turkey are already living on dollar stablecoins. Their local currencies are getting cooked. This is the real crypto story that CNBC never tells you. Stablecoins aren't a use case, they're an actual lifeline for billions of people. $51 million to bring crypto rails to people who need them is bigger than another exchange listing. And finally, British politician Nigel Farage is facing a parliamentary standards probe. The reason? A $6.7 million gift from a billionaire Tether investor. Farage says he had no obligation to declare it because it was for personal security. Must be a nice neighborhood. The donor Christopher Harborne owns 12% of Tether and has dropped £12 million on the Reform Party in total. Whatever side of politics you're on, the lesson is clear. Tether money is everywhere now. The stablecoin nobody trusted a few years ago is funding political parties on 3 continents. That's Compete Token, the gaming crypto with actual games. Link in the description. That's the news for May 14th. Like, subscribe. See you tomorrow.